I get out on the daily chart. I'm looking at swing highs, swing lows, and FEGs. Okay. When price is located at a swing low or a bullish FEG, I have a bullish bias. When price is located at a swing high or a bearish FEG, I have a bearish bias. So it's very clear here that the last thing that NQ engaged with was a swing low, right? So being bullish at the swing low, I mean, geez, look at this drawdown, first of all. Imagine if you were able to get long from this level. I mean, look at this. Where's the measurement? Give me 2 seconds. I mean, wow. Right? So this is why I use this logic. Right? Imagine being bullish at a swing low on the daily chart. You're talking about 10 points of drawdown here. Right? So imagine if you were to just wait for these levels. That's insane. The reason that I was getting to this was how to create a bias. So at a swing low or a bullish FEG, I look to have a bullish bias. And the thing that I look for to engage with that bias is SMT. Okay, so taking a look at SMT, you can see that NQ took out this low, while ES did not take out this low. Right, so now that's telling me that bullish bias, that idea of being bullish at a swing low, now seeing the SMT, that tells me it's now time to engage with that bias. Right, so looking for longs now. Okay, we're pointing out our bias, and here it is. Right, we'll be looking for new all-time highs because of this information. Right, there's really nothing to it. I'm not analyzing data. I'm not analyzing the news. All I'm doing is looking at swing highs, swing lows, and FEGs. Once there's a crack in correlation, that's what's telling me it's time to engage with that idea. So I'll be looking for a move to new all-time highs. Okay. There's bullish SMT at the lows. Right. And this also fits FEGs and swing points in terms of creating bias, because look at where we're bouncing from. Right. We're bouncing from an area of support, whether you want to call that an FEG, an imbalance, it doesn't really matter. But price found support from this area multiple times. So it looks like we'll now head towards resistance. Okay, so bullish bias, looking for new all-time highs to be the target for both for ES, and for NQ, we would target the first swing high here. Right, so here is the target for NQ. So now you have the bias for both NQ and ES. Hold on. There we go. Right, so we'll look for bullish positions. Okay, now once you create a bias, then it's a matter of dealing with New York Open is the first thing, right? Because time is the most important element. So we want to be positioning ourselves at New York Open. When we're positioning ourselves, we want to be doing that from a higher time frame level. We want to, again, look for the SMT and a change in state of delivery. So let's take a look at that as well. All right, so now we're on an hourly chart, and this is where I would be looking for either a higher time frame level or SMT, and it's pretty clear here, right? Here's an FEG, right? A higher time frame level to be looking for longs from, and you have that again on both ES and NQ, right? So you're now dealing with New York Open, you're dealing with a clear bias, you're dealing with a higher time frame level, and lastly, once again, what do you need? SMT to act as the thing telling you it's time to engage, right? So take a look at this, right? Notice how ES took out the previous hourly candle low. Notice how NQ did not take out the previous hourly candle low. So seeing ES run below this low while NQ did not, that is bullish SMT. That would be the thing telling me it's time to engage with that idea. And look at the move that we're getting from it. Right? So now it's just a matter of looking for an entry function, looking for either a change in the state of delivery, looking for an inversion, looking for a unicorn, whatever type of entry function you want to use. Okay, so there's no unicorn in here. Okay, there is really no clear change in the state of delivery here. But if you were to go over to ES, that's why you saw me pointing to this right here, right? When me and Magnus were first talking, you saw me point to this right here. Here's a change in the state of delivery. The SMT is at the lows. Right, so executing this right here, in my opinion, it has the entire recipe. Right, it has everything you need to look for a long position. Okay, so this is what we'll be watching for today. We'll see if it wants to complete the target of 2R, because once again, now it's a matter of you create the process, you create the game plan. Once you can create the game plan, that's where you accept the risk. And if you can accept the risk, then you allow the probabilities to play out. Okay, anytime you can't create a game plan, anytime the information is not clear and you can't define it, anytime you don't see your concepts that you're using, just don't trade. But if you can define these things, that would be the time to take a risk. Right, so this is the risk that we're looking at. We're looking at 10 points of risk for a 20-point reward. Right, so on ES, if you're using one contract, right, 10 times 50, $500 of risk here for $1,000 of reward. Right, 1 to 2 risk to reward. Okay, so the moment in time that this change in the state of delivery became confirmed is right here on the 10-20 candle. Right, when we got a candle closure above the change in the state of delivery. That would be the confirmation to this idea. So here's an entry. Here's a long entry. Here's a long entry. And now we're just holding to see if it goes to target. Okay, so that's the information we have for today. Once again, it's the same thing for me. It's creating a game plan, looking at swing highs, swing lows, and FEGs, looking for a crack in correlation, then executing sound risk management.